I think that if we look at the situation earlier in the year, a number of projections and forecasts have come out differently than we anticipated. If you look at employment, for example, virtually nobody was projecting that we would see unemployment fall as quickly as it has, and get to 3.9% by the end of this year. That's 4 years faster than the median forecaster. And so I think we've seen a number of unanticipated outcomes. But I think that the nomenclature aside, we find ourselves in a position now where we're looking forward, and most forecasters are projecting that the price increases will moderate. When it comes to something like the supply chain challenges, those manifested more significantly than people were anticipating over the course of the summer and early fall, both because of COVID factors, but also buying behavior of major retailers and major freight movers. And so we went into action over the course of the fall to try to help address those issues and the bottlenecking we were seeing at ports. Made very significant progress on that, 40% decline in the amount of time that a container is sitting at the dock.
Sainsbury's raised its profit outlook Wednesday after a strong Christmas season. The UK supermarket group said holiday sales beat forecasts, even if they didn't match the stellar performance a year earlier. Back then, strict lockdowns drove a surge in spending on food and drink. Now Sainsbury's is raising its profit forecast for the coming year by 9% to at least £720 million, or about $981 million. Its shares were up over 2.5% by early afternoon. Shares in bigger rival Tesco also gained, on hopes that it too is set to upgrade its outlook when it reports on Thursday. Sainsbury's has been battling rising inflation in its operating costs, but it says that was more than offset by cost-cutting measures and stronger than expected sales of groceries. Its Argos general merchandise unit benefited as cost savings lifted margins. Lower than expected bad debts and a recovery in lending also helped Sainsbury's financial services unit.
American consumers got hit with the biggest price increases in nearly 40 years. The Labor Department reported Wednesday the Consumer Price Index surged 7% in the year through December. That's well above the Federal Reserve's target. Supply chain snags caused by the health crisis and budding wage pressures are pushing up inflation, driving the index higher, escalating rents and used car and truck prices. The rapid rise of inflation is bolstering expectations that the Fed will begin raising interest rates as early as March. Fed Chair Jerome Powell told lawmakers on Tuesday that the economy no longer needs accommodative policies such as low interest rates.
We are strongly committed to achieving our statutory goals of maximum employment and price stability. We will use our tools to support the economy and a strong labor market, and to prevent higher inflation from becoming entrenched.
The price index was in line with economists' forecasts, so Wall Street took the data in stride, driving stocks higher in early trading Wednesday. Economists believe the year-on-year consumer inflation rate probably peaked in December, but the health crisis could slow progress towards a normalization of supply chains just as they started showing signs of easing.
Volkswagen Group saw its lowest sales figures in 10 years in 2021. That's according to the carmaker Wednesday. The German company made 8.9 million deliveries overall. The Volkswagen brand itself saw an 8.1% drop in sales to just under 4.9 million units. VW was hit hard in China, where sales fell almost 15%. The company put some of the blame on a global shortage of semiconductors. Its woes were in contrast to German rival BMW. The luxury carmaker saw record deliveries for the year. The BMW brand sold more than 2.2 million vehicles. It meant the company overtook Daimler's Mercedes-Benz for the first time in 5 years as the top-selling premium carmaker worldwide. Its success was in part put down to an ability to adapt to supply chain shortages. Both VW and BMW reported strong growth in North America. Sales of hybrid or fully electric vehicles also rose across the industry, particularly in Europe.
The biggest jump in consumer inflation in decades didn't scare investors. Stocks rose Wednesday after that price data turned out to be not as hot as some on Wall Street had feared. Gerber Kawasaki founding partner Hatem Diab.
I think it actually was better than feared. I think everyone expected worse, and we got relatively in line or better numbers. And I think that it's funny how markets work.
A retreat in bond yields helped big cap tech stocks extend their rebound this week, but cyclical stocks also rallied. The Dow rose a modest 38 points. The S&P 500 and Nasdaq added about 0.25%. Healthcare stocks were the biggest drag on the S&P. Biogen shares dropped almost 7% after the U.S. government's Medicare program said it will limit access to its Alzheimer treatment, Aduhelm, to patients who are enrolled in a clinical trial. Shares of Eli Lilly also fell because it is developing similar drugs. It'll be remote first for workers at Robinhood Markets. The online trading platform plans to move a majority of its employees to remote work on a permanent basis. That announcement failed to lift its beleaguered shares.